Video 4. How to start investing with almost no money. Welcome back to the Money Glow Up. I'm your host Ella Monroe. If you have been following along with us from the beginning, you have already learned how to build a budget, how to stop living paycheck to paycheck, and how to destroy your debt once and for all. If you are new here, welcome, and I highly recommend going back and starting from episode 1 so you have the full foundation. Today we are moving into something that genuinely excites me. Because today we are talking about investing. And before you think, Ella, I do not have enough money to invest, I want you to stay right here. Because that is exactly the myth we are busting today. You do not need thousands of dollars to start investing. You do not need a financial advisor. You do not need to understand the stock market inside and out before you begin. You just need to start. And I am going to show you exactly how. Let's get into it. First, let me tell you why investing is not optional if you want to build real wealth. Right now, if your money is sitting in a regular bank account earning almost zero interest, it is actually losing value every single year. Because of something called inflation, the rising cost of everything around you, money that just sits still quietly loses purchasing power over time. Think about it this way. 10 years ago, a grocery run that cost you $100 might cost you $130 or $140 today. The money did not change. But what it can buy did. Investing is how you make your money grow faster than inflation. It is how you turn the money you earn today into significantly more money in the future, without working for every single dollar. This is the secret that wealthy families have used for generations. And it is available to everyone, including you, starting today. So let's talk about how it actually works. When you invest money, say you put it into the stock market, you are buying a tiny piece of real businesses. Companies that make products, provide services, and generate profits. When those companies grow and become more valuable, your investment grows too. Over the long term, the stock market has historically returned an average of around 7 to 10% per year. That means money invested wisely tends to roughly double every 7 to 10 years. And here is where it gets really powerful. It is called compound interest. And it is the closest thing to magic that exists in the financial world. Here is a simple example. You invest $100 and it earns 7% in a year. Now you have $107. Next year that $107 earns 7%. Now you have $114.49. The year after that, $122.50. You did nothing. The money grew on its own. And the longer you leave it, the faster it grows. Because you are earning returns on your returns. That is compound interest. And time is the ingredient that makes it extraordinary. Now, where do you actually put your money? Step 1. Open a Roth IRA. A Roth IRA is a retirement account that you open yourself, completely separate from your job. You can open one in about 15 minutes at places like Fidelity, Charles Schwab, or Vanguard. They are all free to open and you can start with as little as $1. Here is why a Roth IRA is so powerful. You put money in after you have already paid taxes on it. Then it grows completely tax-free. And when you take it out in retirement, you pay zero taxes on all of that growth. Zero. Not a penny. For most people starting out, the Roth IRA is the single best investment account available. Open one today if you do not already have one. Step 2. If your employer offers a 401k with a match, take it. A 401k is a retirement account through your job. And if your employer matches your contributions, that is free money on top of your own investment. Always, contribute enough to get the full match before anything else. It is an instant 100% return on that money. Nothing beats it. Step 3. Invest in index funds. Now that you have your account, what do you actually put inside it? The answer for almost every beginner is index funds. An index fund is a collection of hundreds or even thousands of stocks bundled together into one single investment. When you buy one index fund, you instantly own a tiny piece of hundreds of companies all at once. This is important because it means you are not betting everything on one company doing well. Your money is spread across many companies. If one goes down, the others hold you up. This is called diversification and it is one of the most important principles in investing. The most popular index fund tracks something called the S&P 500, which is the 500 largest companies in America. Companies like Apple, Amazon, Google, Microsoft, and hundreds more. When you invest in an S&P 500 index fund, you own a piece of all of them. Historically, the S&P 500 has returned around 10% per year on average over long periods of time. Some years it goes up. Some years it goes down. But over time, it goes up. Some great index funds to look at as a beginner are VU and VTI at Vanguard, FXAIX at Fidelity, and SWPPX at Charles Schwab. All of them are low cost and widely trusted. Step 4. Start with whatever you have. Even if it is small. This is the part one really want you to hear. Because most people wait. They say I will start investing when I have more money. When things settle down. When I pay off this one bill. And the waiting is the most expensive mistake you can make. Because time in the market is everything. Let me show you what I mean with real numbers. If you invest just $50 per month starting today, at an average 7% annual return, in 30 years you will have approximately $60,000. From just $50 a month. If you invest $100 per month, in 30 years that grows to approximately $121,000. From $100 a month. And if you invest $200 per month, in 30 years you are looking at approximately $243,000. The amount matters less than the habit. Start with whatever you can. Even $10. The habit of investing consistently is what builds wealth over time. Step 5. Automate your investments and leave them alone. Once you have your account set up and your fund chosen, set up automatic monthly contributions. Even a small fixed amount every month. Then do not touch it. Do not check it every day. Do not panic when the market drops, and it will drop sometimes. That is completely normal. Markets go up and markets go down. But over long periods of time they always trend upward. The investors who lose money are usually the ones who panic sell when the market dips. The investors who build wealth are the ones who stay the course. Keep contributing. Keep holding. Let compound interest do its work. Your money is working for you even while you sleep. Even while you are at work. Even on weekends and holidays. That is the power of investing. Now I want to address one more thing before we wrap up. And that is fear. A lot of people are afraid to invest because they do not want to lose money. And that fear is completely understandable. But here is the reality. The biggest financial risk most people take is not investing at all. Keeping your money in a savings account earning almost nothing while inflation quietly eats away at its value. That is a guaranteed loss. Just a slow and invisible one. Investing in a diversified index fund over a long period of time, 10 years or more, has never produced a loss in the history of the US stock market. That does not mean it is guaranteed. But it does mean the odds are strongly in your favor the longer you stay invested. Start small. Stay consistent. Give it time. That is the entire strategy. So here is your action plan for this week. Open a Roth IRA at Fidelity, Vanguard, or Charles Schwab. It takes 15 minutes and it is free. If your employer offers a 401k with a match, make sure you are contributing enough to get the full match. Choose a simple S&P 500 index fund and make your first investment, even if it is just $10 or $20. Set up automatic monthly contributions so it happens without you having to think about it. Then leave it alone and let time do the work. That is how you start investing with almost no money. And that is how you begin building real lasting wealth. If this episode helped you, please drop a like. It helps more people find this channel and get access to this information. And make sure you are subscribed because next week we are talking about something so many people ask me about, how to build and protect your credit score so it works for you instead of against you. You do not want to miss that one. I'm Ella Monroe. This is the Money Glow Up. Financial freedom is a choice. Keep making yours. See you next week.